What's up, guys? This is Brian getting back to you from Trade Algo. We had a bunch of high risk trades hit on Friday, which was fantastic. High risk trades are two confluences or less technically on the charts. Anything that is three confluences or more is an official trade. Obviously, higher confidence trades will come in less quantity if things in the market are moving absurdly slow. We've been getting these slow grinds up and down. So sometimes high risk trades, even though they sound the way they sound, they turn out amazing. They turn out quite incredible. And a lot of people were making a ton of money. Someone was saying my portfolio was up 25% this week. But anyway, I wanted to go over the market and see what my thoughts are on it as of right now that I kind of went over the popular stocks. I'm going to start off with SPY, get into Qs and IWM, and maybe we'll go through the popular stocks. So this be a little bit longer of a video, and see where that takes us. So SPY, I'm going to go to the daily time frame on SPY, and we were in an uptrend on the daily time frame. Uh, Uptrends are higher highs and higher lows, or higher highs consolidation, higher highs and higher lows, and then downtrends are lower lows and lower highs. Once you break a uptrend's higher low and get a lower low, then you're in a downtrend. So higher high, higher low. As long as we don't get a candle close, see, that doesn't matter, that little wick. You need a candle close beneath this level to get into a downtrend. But we didn't get that. We got a higher high and then a higher low. Higher highs, some consolidation. That's okay. Moving sideways is fine. Higher highs, higher lows, and higher highs. We definitely broke through these higher lows right here, right? In the uptrend of higher highs and higher lows, we broke through one and two right here with this candle close. So next thing we would naturally assume is okay, now we're in a downtrend of lower lows and lower highs, lower lows and lower highs, right? But sometimes you get what's called a fake out. A fake out is just a kind of like impulsive candle that will make you believe we're going lower. But in fact, it looks like we just were in this consolidation area and we just springboarded off of it. And that's pretty much what the weekly time frame will show us. Now, many of you folks know that follow me at Trade Algo. We have what's called the Technical Analysis Bible, which I often post in the description of the YouTube videos that I create. These are rules of technical analysis that are evergreen, meaning they apply across all markets for all people. I'm at the mercy of them as much as you guys are. So they're not my rules; they are just rules, and it would serve you immensely well to read this before starting the trade. Right? You want to prime your brain on what to look for. Now, many of you guys know that the bigger the time frame in the charts, the more respected and reliable everything's going to be on your charts. Whether it's a line you drew or a VWAP or something like that, it's always going to be more respected on the daily than the 4 hour, on the weekly than the daily. So going back to SPY on the weekly time frame, I'm going to jump over the week, and we see here that it does look like it was a fake out, right? Because if we respect higher time frames on the daily, it looked like a fake out, higher high, higher low. And now we are pretty much just consolidating, right? No, we actually got a higher high just by like a hair, literally like by like a couple pennies maybe. But that is technically a higher high. So we're still in an uptrend. As long as we don't get a candle close below 622-ish, a candle close beneath it, we're still in an uptrend. That looks like on the daily, it was just, an impulsive drop from news, and news again throws our technicals out the window. That's rule 4 of the Technical Analysis Bible. Technicals work best in a neutral market, but if there's bad news and we get fear and panic selling from the bad news or bad earnings report or bad Trump said this or we're not at war, whatever the bad news is that makes us emotional, emotions water down technicals. But the same thing for positive news and what the crypto market is experiencing right now. Good news puts people in euphoria and optimism and let's just keep buying just nonsensically. That type of environment also waters down or throws technicals right out the window. So as long as we're neutral, I think the market should follow all of these rules. So if you find any one of these rules not working, You go to rule 4 always. Why is this rule 10, rule 11, rule 13, rule 1 not working? It's because we're not neutral where technicals work best. So that's why it helps to know them. If you know a rule is being violated, rule 4 is in play. Always, always and forever. So back to SPY. Looks like we're in an uptrend. And I kind of wanted us to go a little bit lower, honestly, because I used the 10 simple moving average as bullish continuation, and we never got a test of that 10 simple moving average. Now, some folks like the 7, some people like the swear by the 9 or the 11, SMA or EMA. I think the 10 is just a lovely average of all of the above, right? So that's why I use the 10. And I use the SMA because that's what Wall Street uses. So, and that's why you get liquidity grabs, sometimes below the 10 before it's respected to grab the 7, the 9, the 11, and like just make sure we grab all of them, right? And the 10, like I said, is a nice average. It's in the middle of all the ones that people like using, right? So we never got a test of the 10. So we're kind of moving a little bit into la la land, right? Which I don't like. Um, you need higher highs and healthy higher lows in healthy uptrends, right? So this is starting to smell a little funny. And I had a boss that used to say metaphorically, when there's a hint of poop in the air, it's because a porta potty's nearby. So this is looking a little toppy to me. It doesn't. It looks like an artificial pump to make people think we're going higher. I would love a retrace. I would love if we came back down to this 26, 23, 25-ish level and then moved up. And there's nothing wrong with consolidation either. And I'll show that to you on IWM in a moment. But Qs is pretty much the exact same thing. Daily time frame on Qs, we had the higher highs and higher lows. This nice uptrend. Whoops. This nice uptrend you see here from left to right, high, high, higher, low, higher, high, higher, low, higher, high. Then we formed a lower low, but then we kept on grinding higher. It was not a downtrend. It was just a fake out because if we look at the weekly time frame, still in an uptrend. And again, weekly will always supersede the daily. The daily will always supersede the 4-hour. The 4-hour, you guys get the point. Higher high, higher low. We're still in an uptrend. But again, just like SPY, never came back down and tested 10 and all the lower simple moving averages. And if you stay above the 10, that's bullish continuation. Staying above the 10 is still a short-term bullish. Staying above the 50 is short to midterm bullish. Staying above the 100 simple moving average is midterm bullish, as long as we're above it. Staying above the 200 simple moving average is long-term bullish. So we're still above the 10 and just, moving far away from it. I would love a retrace and to catch that. Now, the daily for IWM, which is the Russell, small cap stocks, looks a little bit different. It's a little bit more pronounced. The move was a little bit deeper, and that's typically because small caps get hurt the most when those type of moves hit. And we see kind of like a kind of lazy and lethargic uptrend, and then we didn't really retrace like we did on SPY and Qs. We kind of just consolidated after a small retrace. We never formed a higher high on the weekly. Now let me go to the weekly chart because the weekly is a little bit interesting, like I was saying before. The weekly is actually ranging, moving. It's just a fancy way of saying sideways. We were in an uptrend here, moving from left to right, from the bottom left of the screen, higher highs, higher lows, higher highs, higher lows, higher highs. And now this seems to be the top. See how we keep on bonking our head against the top of this range? And this seems to be the bottom, right? See how we're kind of moving sideways and it looks like we're kind of, I would love if we, stay here another 3 or 4 weeks. Why? Let's go back to the technical analysis Bible, because the longer we range, the more we stay in that, clear high and clear low, the harder we're going to break up or down. And I would love nothing more if we stayed here for, maybe 1, 2, 3 more weeks, and then we got a candle close above this level, maybe a liquidity grab, and then we just zoomed on higher. That would be fantastic. So I don't mind if we move sideways here on IWM. Now, Bitcoin is experiencing a little bit of sideways price action because altcoins, which are alternative cryptos that are not Bitcoin, are getting a little bit of a boost. We're getting some consolidation on Bitcoin because Bitcoin dominance is lower, and all eyes are on this Bitcoin dominance. Are we going to crack 60? Because if we get our first weekly candle close under 60%, that's going to be big for alts. Specifically, Ethereum is getting quite a boost already. So It's literally at 59.89 right now at 8:09 p.m. Eastern, August 9th, 2025. So, I mean, it has pretty much very, very close to 24 hours. So 23 hours, 51 minutes to see if we do reclaim that 60% and then bounce upwards so that Bitcoin gets a boost. And then altcoins experience a little bit of a bleed. So right now it's at a make or break level is what I call those. So Bitcoin doing its thing, Ethereum just in pure euphoria, ladies and gentlemen. So again, do I want to use technicals when there is euphoria and optimism because of whatever? It doesn't even matter if you don't know the reason. Should I use something that is watered down because of some emotion in the market? No, I'm just watching Ethereum. You know, if you're a momentum or volume trader, awesome. You're having the time of your life trading Ethereum, right? But Ethereum just got this massive, massive candle, just invalidated that supply zone just now, created another bullish fair value gap. Um, it's actually at a monthly resistance right now. Let me see this really quick. No, I got to take that off my chart. That is no longer applicable. But it's at a monthly supply zone. So that was created over here with this aggressive drop. Typically, we move about half of the drop, which would be 3,600. Once the euphoria wears off, that would be an excellent place to buy, an amazing place to buy around the 3,600 level. All right. If and when we get it, which is, it could happen, it could not happen, right? This is a game of probabilities, not certainties. We're not here to predict the price action like most newbies think. Where do you think price is going? Look into your crystal ball. That's what newbies think all the time that we're here to do. We're here to react to the market. How do we react to the market? We buy calls at support and we buy puts at resistance. Now, obviously, if you're buying calls and puts or longs and shorts, if you're using the monthly time frame, choosing strike prices and expiration dates, or basically what type of position you're getting into, if you're using the monthly time frame, you need to plan for holding that put or holding that short 3 to 8 weeks, right? So right now, it's very possible that that 3,600 might hit in the next 3 to 8 weeks. So pin this on your calendars, ladies and gentlemen. We're at the bottom of the supply zone. Now, supply zones we can reject from the bottom, middle, and top, right? But if we're close to the top, we're going to get all-time highs before it's rejected, right? We'll get a liquidity grab above, get our headline new all-time highs in Ethereum, first time in 4 years or whatever, so that the newspapers are happy, and then we'll reject, right? So right now we're at the bottom and we're testing it back-to-back days, which is again we're approaching la la land, right? Just nonstop green candles, just like we were back here. It's very possible that we push up here. We're going for our second test of the bottom of that monthly supply zone, and what happens the more we test the supply resistance? The more we test the resistance, the more likely we are to break it. Now, if technicals are holding, we'll break through on test 3, 4, 5, or 6. Yes, sometimes they'll go more than 6 tests, but typically, we're speaking in general. Now, what happens if we get a candle close beyond it on test 1 or 2? That means we're still in euphoria, because if this rule of technicals is being broken, that must mean, again, going back to rule 4, that it's not neutral and that it's euphoric if the market's moving up, or it's in fear if the market's moving down, right? So it's a lot of if this, then that kind of scenarios, right? Now, I did want to go over, let me see if I can go over the popular stocks, because a few setups looked interesting to me. I'm only going to look at the daily time frame. Microsoft looks like it's just forming a higher low. As long as we do not breach this kind of level around 512, I mean, we can drop and still be in an uptrend, guys. You look at the trend. Higher highs, Jesus. Excuse me. Higher highs, higher lows, higher highs, higher lows, higher highs. This is the higher low right here. It can come all the way down here and still be in an uptrend. It's just an aggressive higher low, but that would be the place where I would love to buy. Somewhere around the 513 and 514-ish level is a great place to buy. Even for a small bounce. So you're going to get a bounce there no matter what. How big? Again, we're not here to predict the market. We're here to react. That's a support. We buy calls and support. And then once we're in calls, then we start looking at different factors to see, should I stay in? Should I cut? That's how we react to the market. You're not here to predict anything, folks. If you still think you're trying to predict things, you're likely in newbie land, which we want to get out of there as soon as possible. Same thing with NVIDIA, but NVIDIA is in a 4 hour bullish triangle. It's in an uptrend, as you guys can clearly see, but a bullish triangle is basically, an uptrend, and then we stop here with a clear top. You can see that we keep hitting our head against this ceiling right here, and then higher low, and this is where I would want this higher low right here around the 180-ish level. I'm gonna be buying that up so that and again, 4 hour time frames. If you are playing calls, well, let's go back to choosing strike price and expiration days. I'm gonna have to give that call at least 1 or 3 weeks, right? I'm not typically a swing trader, but I might have to swing trade that one. It just looks it's a textbook picture perfect bullish triangle. When we go back to chart patterns, bullish triangle. I just want to put them side by side so that you see how similar they look. See, it's textbook. Initial rally, and then you form a triangle. I mean, I couldn't make it more perfect myself, honestly. Here's the initial rally. Triangle is a little bit bigger than the one in the picture, but it is what it is. So NVIDIA, eyes on NVIDIA at the bottom of that triangle, right? That's why I have that circle there. Apple just went absolutely bonkers. It was crazy this week. Now, I like Apple I would love it to retest somewhere around the 224 level before it springboards upwards. But if it keeps on going higher, I just don't see it. We did get stopped dead in our tracks at this weekly resistance at 230.55, 230.55. I mean, I just don't see us just blowing through it again and continuing the euphoria. But if the euphoria continues, the bottom of this next daily supply zone is 235-ish. 235.05. So I really don't have much on Apple. Google, also near all-time highs. I don't trade near all-time highs, but I mean, if it comes back down, we can springboard off this new daily sloping trend line at around 197. That'll be a really good place for us to, pick up some calls around the 197 level. I'll probably post that in the Trade Algo Telegram channel. AMD trying to break this bull flag that we were going to break, and then I had an alarm at 3 minutes before the market closed to see if it would be a good swing. We never got that candle close above. So bull flags are flagpole and then a parallel channel of consolidation downwards. See how this is parallel, right? A lot of people think a bull flag is just something that looks like this, anything that looks like that. This is not parallel consolidation. So it really depends. Do you want to follow the textbook version of a bull flag? Yes or no? We didn't get that candle close above. We can technically dance around in here until we finally get that candle close above, and then I will long it, right? Just because we're in a bull flag doesn't mean anything until we get that candle close above, right? So we can push out of this Monday, anytime next week. We can hang out in here for a couple weeks. I hope not, but AMD, that's what I'm looking for. I'm waiting for that pattern to finally break. Tesla is a beautiful setup, mainly because it broke a weekly sloping trend line of resistance. So if we do come back down to this roughly 323-ish level, 324 level, let's call it 324. 324 is a big buy zone for me. Just like the other stock, you see a big circle here with an arrow coming out of it. That's where I'm going to gobble up calls, right? Now, if I'm making trades from the weekly time frame, since that is a weekly support, I need to give it at least 2 weeks for those calls, right? So it's going to make Tesla calls pretty pricey, but I'm in it to win it. And there's a lot of support down here: an hourly bullish fair value gap, a 4-hour bullish fair value gap. We have weekly 10, daily 10, weekly 50. We have a lot of support. So even if I do have to average in after that weekly sloping trend line at 324, you got support all the way from 317 to 324. So when I jump in at 324, I might not grab, in the money calls. I probably have to go deeper in the money, because if I do have to average lower, I want to pass my strike price on the way up after the liquidity grab. I don't know if many of you guys understood that, but there have been deep liquidity grabs below high time frame support in this type of environment, this news-based market. So you have to take that into consideration. Yes, you're buying calls at support, But considering the liquidity grab, let's just say it comes all the way down to 315, I'm probably gonna have to buy a strike of around 320 or three. And yes, that's gonna make a 2 week strike of 320 pretty pricey. But it'll pay off after the liquidity grab and averaging in at the support levels that I have here on my chart. So Tesla is a big watch for me. I might even buy shares. No, don't deal with the time decay or anything like that. Amazon has a really, really bullish setup here. It has a daily bullish fair value gap, a 1 hour bullish fair value gap. It has a lot of support here around the 220, 221-ish level. All right, so that's where I'm planning on buying calls if and when we retrace there on Monday, and we already covered the indexes. So, whew, I'm gonna trade some crypto, guys, and see where that takes me. Because crypto runs 24/7, 365. Hope you guys got something out of this. If you guys have questions, my email is brian@tradealgo.com. I answer the folks that are part of Trade Algo, or you can leave a comment since this is a public video, and hope you got some value out of it. If you did, hit that thumbs up button, leave a comment, let me know how I can help you. And on that note, have a wonderful and blessed rest of the evening and weekend, and I'll see you guys on Monday. Everyone, take care.